Thank you very much, Mike, and Oil and Gas UK for giving me the opportunity to speak to everybody today. What I'm going to touch on is a study that we've done recently for a large group of international energy companies from across Europe. We wanted to investigate the impact of wind intermittency in particular on the gas markets of Europe. And a lot of that is going to be adding to the volatility in demand and the volatility of prices, and that's how it fits into today's title. So generally we're going to look at the impact of wind power on gas demand. Where is that flexibility going to come from? How are we going to provide that over the next 20 years or so? Impact on prices and how the TSOs might be able to manage the system and the challenges on them. Now, this is quite a striking picture. In order to achieve our 2020 targets and our roadmap towards 2050, those green areas there you see for the power generation mix are all renewable generation, and they're going to be representing nearly 50%, in some countries more than 50%, of the installed electricity generation capacity in the future. So in order to achieve these targets, we're going to have an awful lot of renewables on the system. And there's a lot of talk to say, well, that's great, we're going to have lots of cheaply produced electricity, but it's not there all the time. And a lot of this is wind power, so the darker greens at the bottom are offshore wind and onshore wind, and then there's a bit of solar, so there's an awful lot of solar in Germany, as you can see, that add to the mix as well. Again, that's intermittent, it's predictable, but it's intermittent. And that adds to the mix of what's going to be powering the networks at night time, for example. So there's a little picture here to say, well, how does the intermittency work and how does it impact the gas market? There's a weather map there from Christmas Day 2006. We see a nice big high pressure across the North Sea. There's very little wind. It's very cold. There's quite a lot of demand on the system. So the charts on the right show the period leading up to that Christmas Day, so from 22nd of December, there's quite a bit of wind on the system. There's quite very little wind on the system, and which is the green area at the bottom of those charts. And then just after the 25th, so I think like 27th, 28th, 29th of December, this front that's over the Atlantic at the moment starts coming across Europe and brings all that wind with it, and all of a sudden all the wind comes back onto the system and everything else has to come off. So we see that not only is it an impact, so all of a sudden you need a lot of you have to shut down a lot of gas in this particular instance, but it also happens all at the same time across all the countries. So having lots of electrical interconnectors to take things from one country to another, you'll find that it's actually not such a benefit, shall we say, all of the time, because you'll see that it's all calm together, it's all windy together quite often. The impact on the gas markets is that the gas-fired generation is what's going to have to pick up the drop-off in electricity generation from renewables. So CCGTs are the main things that are going to respond to intermittent generation. Consequently, gas demand is going to become less predictable, and it's going to affect for shippers their portfolio for balancing, particularly those that are in liquid hubs, and those that are on long-term contracts. They're going to have very flexible long-term contracts to manage that. The power stations themselves are going to need to ensure that they have the physical and contractual flexibility to manage these demands in an uncertain world. The pictures here are from the GB in Netherlands, from what we would predict in 2012-13 and what we predict for 2030-31. Sorry. In the UK, we have the green area is the 2030 figure, and so we'd look at higher peaks than what we see at the moment and much lower troughs. So there's a much bigger difference in day-to-day volatility of demand. In Netherlands, they don't have so much CCGT as we have at the moment in terms of overall penetration, so they're going to have more CCGTs in 2030. And again, they're going to have a larger volatility in their demand. So these impacts are going to affect the gas markets. In terms of which countries are most affected, the darker the green, the more effect, basically. Those on the Atlantic fringes, where there's more wind, and in fact more wind generation being built, and particularly those countries where there's a high degree of CCGT penetration. Germany doesn't have that at the moment, but with the nuclear phase-out and extra emissions being developed, emission limits being instigated, Germany will have quite a bit more growth in CCGTs over the 2020 to 2030 period. The low correlation on the rest of Europe, it's a mixture really. There's relatively little wind compared to other sources of capacity, and other forms of generation are responding rather than gas. So there's coal responding rather than gas in some of these countries. So supply and storage. So flexibility is going to be important. How are we going to get that out of our gas system? Available supplies are going to be changing over the next 20 years. So there's a modelled picture of Dutch demand, which is the black line that goes across, and the supplies. So they've got an excess of supply, and therefore they're exporting it through the green interconnectors at the bottom. The orange bit is storage, so it's mostly being utilised in the winter and filled in the summer. Fairly representative of what's happening at the moment. If we move forward, their supplies are going to be much reduced by 2030. They're going to be importing some LNG. They have imports from Norway, and therefore their exports are going to be much different. Now, you can see there's some seasonality there to their indigenous production, but they haven't been able to export any of that either. So the Dutch are not going to be a major provider of swing in that respect. If we look towards the UK, we'll see that our UKCS figures are going to be very low. We'll be importing from Norway and from LNG. LNG would be quite high load factor by then. And storage is going to be the main aspect of the provider of the flexibility. So looking at storage, how's storage going to respond? Fast cycle storage in particular is the ones to be well placed to manage the day-to-day of gas, the flexible needs of the gas demand in the future. They are going to be able to inject and withdraw within season, so much easier than the long-range storage such as Rough. So as a consequence, fast cycle storage utilisation increases as gas demand is going to become more volatile. We've got the German picture here, so there's a growth in German capacity, which is why it's high. It goes up between 2012 and 2030, but you can see the range there. So what we've done is run a number of historical weather patterns through future capacity scenarios and seen how much demand is going to be needed based on those weather patterns. So there's, I think, 6 or 7 historical years worth there. So each line represents the historical year. And you can see the volatility is well captured, and the demand and the uncertainty, I suppose, of the storage is there as well. We also looked at slow storage, and that takes an increase as well, depending on how much storage is being built. But there's a requirement for slow cycle storage as well, given the reduction in supplies. So we see that picking up as well, post-2025 in particular. And by 2030 we could need, across Northwest Europe, not the UK, across Northwest Europe in general, another 10 to 15 BCM of storage. And that's not just deliverability, that's going to be the space and capacity as well. Mike's mentioned some of the issues the government's talking about at the moment, and one of the things with the EMR is capacity payments for electricity generators, and that's been talked about on the gas side as well. And the question is, will these get built if there's no support to bring them to be? And that's very questionable. You know, the spreads are not necessarily going to change very much. The seasonality is not going to change. It's the volatility that's going to be a big impact. So it's a lot of pressure on bringing these large-scale storage facilities to market. The thing to add on that is that the sorry. Things to add on that is once you build new storage, you're going to then flatten the prices again. So it needs incentives and long-term contracts to be brought in order to achieve that. Once things are built, then the arbitrage opportunities disappear, and therefore it's the same with interconnections, for example, and it'd be similar with storage. So it's key to have things allow long-term contracts to bring this in, and TPA exemptions to bring these in. Looking at price volatility, example prices here from our modelling. Daily variations in price are going to be increasing. We see higher prices in 2030 than we do at the moment. But also the volatility. So you can see the scale of the GB and German ones in particular. The day-to-day volatility of prices are going to be quite a bit bigger than where we are at the moment. But you also see we don't see a big change in seasonal spreads if these storage facilities, these larger storage facilities, are built. Where will the price volatility increase? As you can imagine, it's in the windier areas. The exception there is Italy. Italy already has a volatile market in terms of regular demand. So extra wind generation doesn't impact that one too much. So it has a highly volatile price anyway, or would have if it was liquid. So a bigger growth in Germany and Spain and again the Atlantic countries are the main places where we'll see increased volatility, which is good for traders. Traders like volatility, and also good for the fast cycle storage because you'd be able to capture more of the extrinsic value, and those are the ones that therefore can be considered profitable to build. Okay, that's going to have all of this extra work is going to have a big impact on the systems. So CCGT is responding to the intermittent generation from wind. It's going to increase the within-day peak requirements on the system. So it's not windy for a day and then not. It's windy for a few hours and then goes down midday or partway through the day. So within-day issues are going to be a big issue for TSOs to manage as well. A particular problem is when wind dies down, when it coincides with an early morning increase in demand, or an early evening increase in demand. So those are the particularly key moments where all of a sudden a lot of CCGTs have to come on very suddenly. So this puts extra strains on line pack, and then potentially more locational balancing actions to cover that, and requiring within-day response from storage. There may be either significant investments required by the TSOs to manage that and maintain a daily balancing regime, or you could move to a within-day balancing regime. We're not proposing hourly, but certainly a smaller portion of the day may be required post-2020 to manage some of this work. Okay, so increasing renewable generation means less predictable running patterns for CCGTs. Gas demand and gas prices are therefore going to become much more volatile in the largest gas markets in Europe. The gas market seems to be well positioned to be able to cope with this, particularly in the short term, leading for the next 10 years or so. But we'll need to make quite a bit of investment to meet the demands in the longer term. Making sure that those signals, those investment signals, are captured and put out there, and investment is made is going to be key. CCGTs and renewables effectively are competing with each other on a day-by-day basis, but overall there has to be a role for both of them in the low carbon generation mix, and you can see gas living without wind, but you can't see wind living without gas. Thank you.